just before 11:30 in Honolulu, 5:30 in New York. It is Tuesday, May 21st, 2019, and this is the Daily Report for Gold and Silver. We had a mixed bag in the precious metals market with gold, silver, and palladium trading lower, platinum trading higher on the day. U.S. equities, interestingly enough, continue to be in rally mode, as well as fractional gains in the U.S. dollar. That's caused an interesting scenario and an interesting chart pattern called a descending triangle, which we'll talk about in our technical studies. But first, let's take a look at current pricing. Gold closed down $2.80, basis the June contract is at $1,274.50. Silver closed off by 20 cents today and is currently fixed at $14.42.5. As we said, platinum was the only precious metal to buck the trend, up $3 at $817.20. And lastly, palladium down well over a full percentage point, a net decline of $15.40, and is currently bid at $1,315.60. Let's take a look at our technical studies. So traders, in today's opening letter, I talked about a pattern that we have identified, simply called a descending triangle. And according to Investopedia, they describe this pattern as a bearish chart pattern used in technical analysis that is created by drawing one trend line that connects a series of lower highs and a second horizontal trend line that connects a series of lows. And as you can see on our chart, there's absolutely purely this upside resistance line, that's this red line here, and we have had a sequential series of lower lows beginning at $1,350 and then trading lower on each continuing high. Now, at the same time, at first we had a series of lower lows. We've recently had these flat lows, and what we're getting now is a triple bottom, and that's what I believe clearly marks and identifies this trend pattern. And traders, as you can clearly see, I've put up an example of this price chart pattern, and we are certainly defining the series of descending lower highs. And recently we've had three flat bottoms. Now, on every case that I've looked at, it has predicted that it would break to the downside after achieving so many lows and go to a lower low. And that's the key here. Now, there is a caveat, and the caveat would have to be that the market actually finds support in this area and then begins to trade higher, and more importantly, finish above 1302. Otherwise, we're still in an absolutely bearish trend. The other thing that's been heavily weighing down on it, of course, is the dollar, but we have these flat or equal lows that have come in recently. We certainly have a series of lower highs coming in off of the high at 1350. This particular occasion right here, I believe that we would see gold trade to either 1248 or 1221, the 0.78 and 0.618% retracements. So, traders, my recommendation is to maintain our current neutral stance and look to see how this market acts, because if it does break these lows here, that is a signal to sell into the market. If it bounces, it would be a short-lived rally at best, and I wouldn't feel comfortable till about 1287, especially since that is the most recent area that provided some support, and that goes back to April as well as March. I do believe that that is unlikely, and we will see lower lows. If it does breach 67, we will look to initiate a short position. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.